Getting pre-approved for a mortgage feels like a big win, and honestly it is. But here's what most buyers don't realize. Getting pre-approved is only the first step. What you do after getting pre-approved can either make or break your ability to buy a home. And while most buyers have the best intentions, I want to help you avoid some of those mistakes that can cause delays, stress, or even problems with your loan right before closing. Buyers can do all the right things to get approved and then accidentally make a small error in judgment that creates uncertainty, stress, or delays. So today I want to walk you through the biggest mistakes to avoid after getting pre-approved so that you don't unintentionally create problems during your home purchase without even realizing it. If we haven't met yet, I'm Brian Diaz, a real estate agent here in Central Florida. I make videos like this to help buyers make smarter decisions using real-world experience, real strategy, and lessons learned from real transactions. And trust me, the time between pre-approval and closing is where a lot of deals either stay smooth or start to get complicated. One of the biggest mistakes that buyers make after getting pre-approved is making a large purchase before closing. I'm talking about things like buying a car, financing furniture, opening store credit cards, or even putting big purchases on a regular credit card. And I get it. You're excited. You're thinking about your new home and how you want to furnish it. But here's the problem. Your lender approved you based on your financial situation at the moment in time where you submitted the application. You suddenly add new debt. Your debt to income ratio changes, and that can impact your ability to qualify. As a buyer, the last thing you want to do is delay closing just because you were excited and you financed some furniture before the keys were even in your hand. My advice is simple. Wait until after closing before making any large purchases. Another mistake that surprises a lot of people is changing jobs during the home buying process. Changing jobs can create serious issues, even if the new job pays more. Lenders look at employment stability. So if you change jobs, switch industries, or move from salary to commission, your lender may need to re-verify everything. That can delay your closing, or in some cases, force the loan to be restructured from the beginning. Before you make any employment changes, always talk to your lender first, not after, before. Another common mistake is letting your credit slip during the process. Your credit is monitored throughout the entire loan process. So if you miss a payment, you max out a credit card, or you let your balances climb too high, your credit score can drop. And that drop could change your loan terms or even affect your approval altogether. Something as simple as forgetting to pay a credit card bill on time can cause unexpected problems. Set reminders, stay current, keep everything stable, and most importantly, stay in constant communication with your lender. If there are any changes, give them a heads up so any issues can be addressed early. Another issue I see from time to time is buyers moving money around without realizing how that looks to lenders. For example, moving large amounts of money between accounts, making large cash deposits, or receiving funds that can't be properly documented. Lenders are required to verify where your funds come from. If money suddenly appears without documentation, it raises questions, and questions can slow things down. If you plan to move money or receive funds from family, talk to your lender first so it's documented properly. Opening new credit accounts is another mistake that catches buyers off guard. Even if you don't use the account, opening a new credit line can affect your credit score and your qualifying ratios. That includes new credit cards, store accounts, buy now, pay later plans, or financing promotions. Even signing up for something simple at a checkout line can create issues. If someone offers you a discount for opening a store card, just say no. Another mistake that causes unnecessary stress is ignoring lender requests or waiting too long to send your documents. Your lender will request things like pay stubs, bank statements, tax returns, and employment verification throughout the process. And timing matters. Delays in sending documents can push back your closing date and create stress for everyone involved. The sooner that you respond, the smoother your closing will be. One mindset mistake that I see often is buyers assuming that they're done once they're pre-approved. Some buyers think that getting pre-approved means that everything's locked in, but the truth is that your loan is fully approved closer to closing, not at the beginning. Your financial picture is reviewed multiple times throughout the process, so staying consistent matters more than most buyers realize. Let me give you a real-world example of how this plays out. I once had a buyer who did everything right until they financed furniture before closing. They thought it was harmless. After all, they'd already been approved. But that new debt changed their ratios just enough that we had to delay closing while the lender recalculated everything. We still closed, but it created stress that could have been avoided by simply waiting. And that's really what this comes down to, avoiding preventable problems. So if you remember nothing else from this video, remember this. After getting pre-approved, your job is to keep everything as stable as possible. Don't make any large purchases. Don't change jobs without talking to your lender first. Don't miss any payments. Don't move any money around without documentation. Don't open any new credit accounts. And don't delay sending your documents. And don't assume that you're done once you're pre-approved. If you can keep your finances steady, your path to closing becomes much smoother. If you're planning to buy a home this year and you're working towards getting pre-approved or you're already approved, this is one of the most important phases of the process. It's essentially step one in protecting your ability to close. Most of the problems that I see aren't because buyers made bad decisions. They just didn't know the rules. If you're thinking about buying in Central Florida and you want guidance on how to avoid these kinds of mistakes, feel free to reach out. I'm always happy to walk you through the process so there's no surprises along the way. And if you found this helpful, make sure to like the video and subscribe to the channel. Share it with someone who's planning to buy a home, because the more you understand this process, the more confident you'll feel when it's time to close. Thank you for watching, and I'll see you on the next video.